I want to rip up the script here and forget about your wonderful Wedbush research note of the acuity of Microsoft and Apple and what they're doing. The FAANG stocks are melt up trees to the sky, as Mr. Weinberg would say years ago. There is a point where it ends. Are these the kind of events that can give us FAANG angst in the first quarter?
Yeah, no doubt. I think when you look at today's events, you can see a risk off in the near term. And I think you could see in terms of a re-rating that goes lower in the near term, and ultimately some weekend shakeout. But in our opinion, it comes down to fork in the road. What do you do there? And I continue to think it's a risk on for 2020 in terms of our view.
What we've seen, I'm not going to do the charts right now, folks, because our control room is so busy with the headlines from Iran and from Baghdad as well. But we've shown a couple charts today of second derivative log convexity of Apple, that curve up that you get with an acceleration. Do you sense the FAANGs as a pullback, a regression to the mean, or do they, as a general statement, have the ability to overshoot down and below that regression, given the shocks like what we've seen?
Yeah, I'd be surprised if they overshot too negative, just given some of the fun.
There's just so much energy there that they can only go back to the mean.
Well, I think it's the fundamental thesis going into this year, the way I think a lot of these names go higher because of the growth. Because ultimately, there's a scarcity of growth in the market, in the IT spending environment, 3 to 4%. And when you have 15, 20% growth, or what I view as a 5G super cycle in Apple, I ultimately think you see buyers on weakness.
Dan, great to speak to you today. The chart Tom's referring to shows, as I'm sure you're aware, Apple the most overbought in a decade. And our guest the previous hour said that even though he sold Apple stock a year ago, which he regretted, he wouldn't want to buy now because the price is so divorced from the fundamentals. You're saying it's not.
Yeah, because our thesis really over the last few years is a re-rating in Apple. And not just because of the services, but because of the install base and what I view as 350 million iPhones are going to be sold in the next year and a half. So I think right now what you're starting to see is that paradigm's changing for Apple. No doubt, I mean, the stock's at record highs. You could see some pullbacks here. I continue to think $350 to $400 over the next year. And when you have macro exogenous events like today, I view it as opportunities to own these names in terms of just general, in terms of FAANG, where I still think FAANG names go up 15, 20% going into this year. And this morning's events don't change that, at least for me.